You're welcome, guys. Welcome to Let's Make Derive Group YouTube channel. I believe that if you've seen this video, that means you must have searched for something and clicked on it, and then you'll get into this very educating video. Please and please, the contents of this video are worthwhile, so when you're listening to it, take your time and listen to it very, very well, so that it will be high profit yielding for you. Today we're going to be talking about three major indices in the forex market. We're going to be talking about, first of all, the boom and crash index, the step index, the range break, and the newly added index by DERIV known as the JUMP indices. Especially for me, I always call these four indices special indices. I call them that because the normal indices we know how to trade, the volatility indices, is quite different, from these other indices, although that they can be traded the same way. Something like the step index and the jump indices have the same, market movements with the volatility indices, but for the boom and crash and the range break that deals with spikes, they are not the same. So today we're going to be looking at these four major indices trading, and they are very, very, very profit yielding. First of all, let's talk about the most popular among them. The most popular among these four indices is the crash and boom indices, or the boom and crash indices. Now, they are offered in DERIV, like you all know, and they are into four types. There are four types of the crash and boom indices. As the name suggests, you should know that this is more of a rising and the falling market. The crash indices come in two ways: the crash 1000 index and the crash 500 index. And then the crash 500, listen up, the crash 500 index has on average one drop in price series every 500 weeks. Crash 500 has an average of one drop in the price series every 500 tick, while the crash 1000 has an average of one drop in price in every 1000 tick. While the boom index, which also come in two ways, they have the boom 500 and the boom 1000, and then boom 500 has one average spike in every 500 ticks, while boom 1000 has an average one spike in every 1000 ticks. Now, I've made a video on boom and crash index already, but I'm just going to explain it little before I go into the other synthetic indices trading that I wanted really to talk about. But in case the few minutes I'm going to explain the boom and crash, in case it's not going to help you understand it better, please refer back to the YouTube channel, which I believe you must have subscribed already. If, like I was saying, if the few minutes I'm going to spend discussing about the boom and crash, if it's not that helpful to you or you don't understand it well, refer back to the YouTube channel. I have made videos on the explanation of the boom and crash, and I've made videos on strategy that I personally use on the boom and crash. Now, before then, let's just tell you, I will just say a few things about the boom and crash. Now, unlike the normal indices, volatility indices that you normally see, and then all those that move in a particular manner, or move if you're selling, it could sell. If you wants to buy, it wouldn't really take much momentum to buy, and all those. Now, but for the boom and crash, it is different. As you can see, it is different. You can see quick eruptions. Remember what I said about the candlesticks and then the time frame, because I wanted to give an explanation on this right now. In case you don't know about the candlesticks and the time frames, refer back to the video there, the YouTube channel. You will see them because I've made videos on it already. Now, in the boom and crash, this is 1 minute for a 1 minute time frame. Look at what I'm using to identify where I'm pointing at. Look at it, it's going around the screen right now. Look at it. So this is 1 minute just a candlestick showing there is 1 minute. That means this candlestick was formed in 1 minute. This candlestick was formed in 1 minute. This one was formed in 1 minute. This the same, formed in 1 minute. This one also was formed in 1 minute. And then also this one was formed in 1 minute. I'm trying to explain to you the value or the meaning of spikes. The spikes occur in the boom and crash index. And then, like I said in the video where I talked about the boom and crash index, I said that a boom is a selling market and then a spike in a boom is a buy. Why for a crash is a buying market and then the spike in a buy is a sell. I'll repeat what I said. A boom, a crash is a buying market, and then the crash in a buy in a crash the spike in a crash is a sell. Why the boom is a selling market and then the crash in a boom is a buy. It's very, very easy to understand and very high profit yielding. Believe me, it's very, very, very high profit yielding. This is forex, and you need to understand the terminologies in forex. If someone is telling you that you can use strategies to make money in forex or indicators without knowing, the basics or the principles, believe me, that person is lying to you. This is more like a business than a gambling. People who call it gambling are those who just venture into it without learning it, and then they come out crying because it's a business and not some sort of gambling. Believe me when I tell you that. Forex is something that if you do learn it very well, it's going to be very high profit yielding for you. That's the truth. You cannot make millions in forex without learning it. It's not possible. It's just like being very, very good. Maybe you say you're intelligent, and then you think you can do very good in mathematics without actually knowing what to do. So that's it. So you need to understand the basics of the boom and crash indices. I don't really want to talk about it in this very episode of the video. So if you have questions on it, you can write it on the comment section, or if you want more knowledge on it, please refer back to the video I've done already on the stuff on boom and crash index. The title is boom and crash. You see it in the video section of this YouTube channel. This is DERIV. So quickly, let's go to the step index. The step index is also another special indices, and then it stimulates a market step by step, one by one. It has equal probability of going up or going down. The step index is stimulates a market step by step, and then it has equal probability of going up or going down with a fixed step of 0.1. Equal probability of going up or down with a fixed step of 0.1. Now the for those who really know, or those who know price action, the step index can be traded the same way other indices are traded. I just love to refer to them as special indices because they are special, and because they are high profit yielding, and because they are not among the volatility indices that is very popular and that is very known. Now there is a video I've made also for step index. In case you want to know more knowledge about it, please do refer back to the video. If you have questions, you can ask me in the comment section. Good. Now the third special indices that is known is the range break indices. The range break indices. Let's see if we can open that. The range break indices. Now what is the range break indices? The range break indices break the range of the market move in either once every 200 attempts. The range break indices break the range of the index move in either once every 200 attempts on average. It breaks it every once 200. Now there are two range break indices. We have the range 100, we have the range 1000, and as you can see, it's also different from the normal ones you're seeing. Is different from the volatility indices from your crypto trading or from your currency trading, in case you've been trading currencies before venturing into indices. And it's different for those who have been trading indices. It is different from the volatility indices we all know. As you can see, Let's go to a lower time frame. Look at how this works. It breaks a range once on every 100 attempts. On average, it breaks a range. Look at how with this, all these are formed in 1 minute. This is formed in 1 minute. This is formed in 1 minute. This is formed in 1 minute. Now look at how the range break works. Like the name sounds, the market must go within a range, and then at a particular time it will break that range. The market must go within a range, and then at a particular time the range will be broken. Look at what I mean. Let's use this for example. This market has been going through a range. Let's use rectangular, horizontal and vertical lines. There's a video where I talked about how to draw trend lines. You can also see it in the channel. Now this is a range, or let's look for something that is high. Okay, let's try this one. You know what a ranging market is? I've talked about it also in my previous videos, where I talked about in Milk Derive Group Introduction Guide to Price Action, where I told you that there are 3 market movements in the market. There are ranging markets, which is this. There are trending markets, that is going in a trend, either uptrend or high trend, and then there's a breakout and a retest market, and then other price action patterns which can define other price markets. Now in case you need more knowledge on that, refer back to the video in the channel. The channel is filled with very educating stuffs. I just wanted to introduce this big topic of special indices to you in this section of the video. Now look at this. The market was moving in a range. Market was moving in a range. Once it gets here, it comes back here. Once it gets here, it comes back here. That was how the market was moving, and then at a particular time it broke it to the upside. That is a range. When the market moved for a particular time, and then once it will just break it, break away from the range of the market. And then remember what I always said whenever you're talking about ranges. Now if you use the horizontal and vertical lines installed already in your MetaTrader 5, if you use it for analysis of this index, as you can see from what you're seeing on the screen right now, the market moved in a range, and then once it got here, it went back to that same part, broke it out, and then finally broke out to the downside, and then it started selling. I don't know if you understand what I'm saying. Please refer back to the video where I talked about range break indices. It's in the channel and you will love it. It's very profit yielding. Now the next indices is the newly installed one by DERIV, which is the JUMP index. The JUMP index is very profit yielding and very lovable to trade. It's just like the normal indices you have, but right now, as of the time I made this video, I've only traded it like 5 or 3 times, and it has been profit yielding for me. Why I haven't traded it much times is because the market is still forming, since it's a new indices. If you're watching this video a week after, or 1 hour, or 1 week, or 2 weeks, or 2 months after, please do know that I've already started trading the indices. They are very high profit yielding. It's just that I want the market to form very well in the higher time frames. If you go to the higher time frames, look at this part. As of when the video was made, these whole parts were is very empty, and for that very fact I just can't trade it. Price action is melted upon with with things that have happened in the past, and then you're using it, of course, to understand what will happen in the future. So that's it on the special indices trading. Is very high profit yielding. If you want videos about the JUMP index, I've also made videos about it in the YouTube channel. Please go back there and watch it. And then thank you very much for being with us with this powerful section of the special indices trading. This is Milk Derive Group. Don't forget to subscribe to the channel. Thank you, and this is Milk Derive.